Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in corporate filings. Let's just say AquaBounty Technologies has been busy cooking up some new things. This past quarter, and not just for their fish, this filing is a pretty significant update. We are talking about new money coming in and some big shakeups behind the scenes all happening very quickly. Alright, so what we have here is a current report filed by AquaBounty Technologies, Incorporated AQB, essentially a way for them to tell the world about major events that are happening right now. And as you can see from the date, the 28th of October 2025, things have been moving fast. So the big news is that AquaBounty has entered into some agreements to sell senior notes. That's basically like taking out a big loan, but through selling special IAS to investors. These notes total $4 million. And they are not to be taken lightly. First off, they're unsecured, meaning there isn't any specific company asset tied to them as collateral. If things go south second, they are non-convertible, meaning investors can't swap them for company stock at some point, and third, they are carrying a whopping 18 interest rate per year. That is a very high interest rate and tells us the company is likely seen as a riskier prospect or really needs this cash. Fast, the maturity date is set for 18 months from when they close the deal, and the important part is that both the principal, the original loan amount, and the interest are all paid at that maturity date unless something goes wrong. This payment structure where everything is due at the end can put a lot of pressure on the company to have that cash ready. And if something bad happens like a default, the investors get some serious rights. Speaking of bad things, the list of what constitutes an event of default is quite extensive. We have the usual suspects like not paying back the money or breaking promises in the agreement, but it also includes things like unauthorized changes to the board composition problems, keeping their stock listed on the Nasdaq falling behind on SEC filings, and having to restate financial reports. If that has a material adverse effect, that last one is particularly concerning because it means if their books are found to be seriously wrong, it triggers a default. Now here is something really interesting among the remedies. If there is an event of default, the investors get the right to nominate another director to the company's board. This means the investors are gaining leverage and a direct say in how the company is run, which is a pretty big deal. And that leverage is already being used, as you can see from the mention that these agreements required changes to the board of directors, which we'll get to in a bit. So why did they need this $4 million? The company states the money is for general corporate purposes, working capital operational funding, and paying off some existing debts. This tells us they are likely facing some cash flow challenges, and this funding is crucial to keep the lights on and operations running. To make all this happen, they hired Univest Securities Incorporated as a placement agent, essentially a broker to help sell these notes, and as is typical, they are paying a pretty hefty fee, 7% of the gross proceeds, plus up to $125,000 for expenses. That 7% fee on $4 million is $280,000, so a significant chunk of money going to the agent. Now let's talk about what this means for control of the company. The filing hints that if certain conditions are met, especially concerning the board composition, the investors could end up having the ability to designate a majority of the board. This could indeed result in a change in control of AquaBounty Technologies. Incorporated, it is important to note though that the investors currently don't directly own any voting shares of the company. This new funding and the associated agreements are what give them this potential to influence control. This is where the board shakeup really comes into play. On the 28th of October 2025, as a condition for getting the money, two board members, Christine T. St. Clair and Gal Sharps-Myers, resigned, and in stepped two new directors, Graydon Bensler and Braden Lichty. These new directors were appointed as part of the arrangement with the investors. Graydon Bensler is described as a chartered financial analyst with experience in capital markets, corporate finance, and strategic leadership. He has a background leading public holding companies and subsidiaries and has served on multiple public company boards. That's solid financial and leadership experience. Braden Lichty is the chief executive officer of a private holding corporation and an investment and advisory services company. He has also served on multiple public company boards, again suggesting a focus on financial acumen and leadership. Both of these new directors are immediately joining the Audit Committee and the Compensation and Human Capital Committee. This means they will be very involved in overseeing the company's financial reporting and executive pay practices. Their compensation will be the same as the current board members, and they don't appear to have any reportable related party transactions with the company separately. But the changes don't stop there. Sylvia Wolf has also given notice of her resignation from the board. However, her departure is contingent on a few things. First, the senior notes need to be funded, which they have been. Second, it will be effective by the 31st of January 2026, but also if the company undergoes a change of control transaction or sells off more than 33% of its AS. Sets it also has a stipulation about directors' and officers' insurance policies, which is for protecting the people running the company in case of lawsuits. Similarly, Rick Sterling, another board member, has also submitted a resignation. Notice his resignation is also contingent on the funding of the senior notes and the filing of the company's annual report on Form 10. K for the fiscal year ending the 31st of December 2025, so his exit is tied to a future regulatory milestone, and again with those insurance policy conditions. The filing is very clear to state that these resignations are not due to any disagreements with the company about its operations policies or practices. This is important to show everything is amicable and part of the pre-arranged deal. Looking at all of this, AquaBounty Technologies Incorporated is clearly in a situation where they needed a significant amount of cash very quickly. The high interest rate on these senior notes is a flashing red light signaling financial pressure, and a perceived higher risk by the market, the fact that the investors have secured such significant influence over the board composition, including the potential to control a majority, is a major shift in the company's governance and strategic direction. This isn't just a simple loan, it is a lifeline that comes with strings attached. The appointment of new directors with strong financial backgrounds suggests an immediate focus on financial stability and oversight. However, the contingent resignations of other board members and the events of default tied to financial reporting and board stability highlight ongoing risks. The ability of the investors to potentially gain control means the company's future strategy could be heavily influenced by their priorities. Overall, AquaBounty Technologies Incorporated is navigating a critical period. The new funding is essential for survival. Are in operations, but the terms of the deal indicate a company under significant strain. The increased influence of the investors on the board will be something to watch very closely, as it will likely shape the company's path forward. Will this infusion of cash and new oversight lead to a turnaround, or will the high cost of this funding and the associated risks prove too much to overcome? That is the big question, right? Now, alright, that is our breakdown of AquaBounty Technologies Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, make sure to join our Discord community linked in the description below. Thanks for watching. See you next time.